seem to be moving towards looking at what institutions, firms and businesses can do to help people develop financial skills. So let's focus first of all on the financial sector, who after all sell financial products. And when I go on the websites of various banks and other institutions, there are bits and pieces of sort of financial education or sort of financial education lurking there. So in a sense they're trying to do something. But Andy, do you think it's the responsibility of banks and other financial institutions to provide education to their customers?
I think it's absolutely essential. I mean, finance, as in many sectors, is a trust business. And that means the trust of your customers and clients. That has been lost. It's very clear that that has been lost over the past few years. That's why financial services and banks in particular are towards the bottom of the trust league table. And there's a cost for that for the banks. I mean, they can't go on the same path, and I think many of the more enlightened would admit to that now. So I think them doing more to produce products, to explain, understand, and indeed to educate their customers about what's in their best interests, the customers, and ultimately then in the best interests of the institution making those services available is absolutely essential. And you need only look at the cost to the financial services sector itself, something like PPI mis-selling, to underscore the importance of that. So absolutely do think there must be a responsibility on the financial sector to do more than it has done so far. Do I think we're yet there? No, I don't think we're yet there. One of the factors that might get us there, actually, and this goes to Sue's point a little, is the new entrants into the market. Because when you are mistrustful of the existing incumbents, a natural place to turn would be the new entrants, including some non-banks, to offer those services, be it utility or otherwise, at a cheaper cost to a wider spectrum of the population. I'm hopeful there that those challengers, those new entrants, will provide the hurry-up to the existing incumbents to provide a better offering to customers. That's not about stability at all cost. Actually, that's disruptive innovation. And I think there's little bits of that starting to occur. I'd be very supportive of more of that happening, actually.
Brian, what are your views on this?
Well, I think challenger banks are very interesting. What I'm not sure of is whether their disruptive activity will be very positively providing new products and explaining them, which is that's slightly different from financial education in the round. That's telling you about your product. Right. So I'm still not quite sure whether the industry, either the challenger banks or indeed the sort of incumbents, really are geared up for or likely to provide education in the broader sense, as opposed to, you want a pension, here are our products or here are their products, but that's not quite the same as explaining the background to pensions, and the long-term savings, the broader options. It's not quite the same. And I'm not saying they couldn't do it, but I think simply what is in their commercial interest is to explain their products, perhaps in a reasonably rounded sense, but not to step back, for example, in the way you are here, or the way Money Advice Service, I know that's all about to change, but that kind of more generic education, I'm not sure the banks really do that, challenger or otherwise, or whether they will.
Okay.
Yes, no, I'd agree with that, actually. I think, again, if you look at the trend, banks seem to me to be pulling away from offering advice and education to the extent that they did offer education anyway. But certainly, if you look at the numbers of advisors, financial advisors that have decreased over the last few years, I believe it's mostly out of banks that seems to have where the drop off has occurred. And I don't see any signs that banks are turning to physical, to human beings offering advice to their customers. If anything, I think if you do get advice back through the banking channel, it'll probably come through Robo or some equivalent to the mergers. I doubt it'll be through somebody sitting there offering you.
Would you associate financial advice on a product with education?
It's a good question. I don't think if I was in a bank, I probably would.
I think there's different levels of education here. So advice on one end of the spectrum where you pay some money to get a product picked for you that meets your circumstances, but that's not really education in the same way for many of our clients who would have more of a basic understanding of their finances and need, as we were sort of saying, a more kind of beginner's guide to how to budget your incomings and outgoings, etc. Now, I agree with Andy that I think there's a huge responsibility on banks and financial institutions to provide that. I think that then takes us back to our previous conversation about who is best placed to deliver it, because in our experiences, people who may owe their bank, their credit card, hundreds or thousands of pounds potentially don't particularly want to go to the same branch and have an hour-long lecture about why they've got into debt or what these kind of APRs on their credit card mean. So there needs to be better partnership working, I think, between the advice sector, various different education sectors, your course, Martin, and the range of banks and financial institutions out there. And if we need public institutions, the Bank of England, the government, the FCA more generally, to encourage and foster that, then I think that's a bet worth having.
Well, I agree with all those things. I mean, I just come back to the point Sue made, which is there is just a question of which customers banks want to serve and which not, on a purely commercial basis, and whether, at the extent to which that is, if you like, moderated by a more general sense of social responsibility, and indeed, if you like, doing things which may not be strictly profitable but which benefit the whole business. I mean, basic bank accounts were a good example, actually. Were introduced in 2004, 2005, not very profitable to the banks, but introduced under an agreement, an informal agreement between the government and the banks, and they produced them. They weren't very profitable, but they did it. I mean, they stepped up to it and they rolled them out. So it's clear that the banks do some things which are not strictly profitable, but I'm not sure of the sort of boundaries of that, or indeed the uniformity of it across banks, if you see what I mean. And I do think that is quite an important feature, particularly when you use the word utility, because a classical utility, which banks are not really in the kind of natural monopoly sense, but a classical utility has obligations to serve, precisely because it is a natural monopoly and there aren't competitors. And I'm not suggesting obligation to serve, although the European directive, Payment Accounts Directive, actually has effectively produced an obligation to serve actually in relation to basic banking. But I think that's just a general issue. What you've got there is a set of groups. They're not a natural monopoly, and they're in the private sector, but they have these utility-like characteristics, and they are essential. And unlike other essential products, it's not easy to switch. So, food's essential as well, but if you don't like the sausage in Sainsbury's, you go to somewhere and you can switch very quickly. It's much more difficult to switch relationships and so on. So it's that whole question about something which is sort of a quasi utility question, possibly not really being keen to serve everybody who would like its products, which I think is a sort of generic problem that needs to be addressed.
So you wanted to say something?
Yeah, I did. Back to the original. I wouldn't trust the banks to tell me the time, frankly. I mean, much less do financial education. What we as a panel want is for banks to have a duty of care to their customers, because in a legal sense, because this would help with so many of these issues. Financial capability should be done by people completely independent from selling. Same with advice or guidance. It should be completely independent from selling. So the bank should have a duty of care. They should explain things in ways their customers understand, and they shouldn't sell stuff until they know their customers understand it. Now, you can argue that is a form of financial education, but it's not, I think, what we're talking about in this wider sense. Because people do learn by doing when it comes to financial products. It's just that many are very one-off in their nature. Like a pension is a very one-off thing you can't learn by doing. So that, I think, as you were saying earlier, there are different kind of levels of advice and guidance that people need at different times.